Hey guys, Casey here. You're tuning in to another episode of Lions Den Investments and Reviews. And in today's video, I wanted to talk about, the long-term strategy for investing versus short-term. Okay, I've talked about this a few times in, some of my articles that I've written in the past on my websites and shooting videos for, videos on, my YouTube channel from a long, long time ago. Okay. I'm no longer doing that. I'm focusing in on this one. But I wanted to, shoot another video again talking about that because I haven't made one for this channel. And so, yeah, I mean, long term versus short term. So you got day traders and you got investors. What's the biggest difference? Well, I can tell you right now, traders like to focus in on shorter time frames. And you might notice right now, as we're talking about time frames, I've got a chart up here on this platform TradingView that I use. And if you're interested in using TradingView, all you have to do is just go to tradingview.com. You can sign up for free, create your own account, and then start adding in your own ticker symbols and stocks and stuff like that. So if you're interested in kind of playing around with this platform, I'd highly recommend doing so. It's a great tool to use. I'm not going to get into TradingView today though, because that video would go too long. So basically what I'm just going to show you here, when it comes to traders, like I said, they like to focus on the shorter time frames. So with this chart I've got one on Coca-Cola right now. We'll go down to like a 4-hour time frame. Okay, now what that means is that each one of these candles represents 4 hours. Okay, and that tracks the price of Coca-Cola's stock. All right, now what day traders will do a lot of times, they focus in and they zoom in on these shorter time frames like this. And I mean, sometimes they'll go down to like the hourly chart or the 2 hour. So like on this one, it's a 2 hour chart. We're focusing on every candle, which represents 2 hours. Now, what's the problem with this? Okay, if you're a good trader, and say like you're a professional and you know what you're doing when it comes to technical analysis and reading charts and knowing when to get in and out, and I'm talking about timing, you can make some money. The problem with this, though, again, is it's short term. Okay, so you're zoomed way in on the price movement, and what tends to happen with a lot of traders, and this is why a lot of traders lose, by the way, their emotions get the best of them. And it may not happen right away, but most of the time it happens over longer time frames. As they continue to trade, their emotions will get the best of them, and they end up losing money. And the reason why, a lot of times, you'll hear from investors like Warren Buffett that play the long term, play the long haul, be in it for years on end when it comes to investing, and dollar cost average in, meaning you're buying on the dips. The reason why he says that's a better strategy than being a day trader is because, guys, realistically, and then this is just on a statistic level, statistically, okay, and this comes from all your major hedge funds out there. I found this information through a couple books I read where Tony Robbins went in. He interviewed like basically the top 50 wealthiest individuals in America. Okay, I've actually been lucky enough and had the chance to talk to a couple of these guys myself. But what they say is that 96% of day traders who do short term, and these are guys on Wall Street, okay? These are guys they work for hedge funds. They know what they're doing. 96% of them will lose short term playing this trading game within the first 5 years. So they might have a couple good years, right, where they make a lot of money. They end up losing that within about a 5 year time frame. And of that 4% that win, okay, statistically, you go another 5 years, about 99% of those guys are going to lose money. All right, and when I say lose money, I'm talking lose big. Especially because of a correction in the market, and things coming down 20, 30%. These guys get stuck in that stuff and they end up losing a lot of money. And they're playing with not their own money, they're playing with your money. Okay, this is money that comes into your 401k accounts and stuff like that. So it's that it's not cool at all what they're doing with 401k accounts and stuff like that. And I'm talking about the big banks, the hedge fund managers, and the traders. Um, and you gotta be able to take control over your own money, okay? Because at the end of the day, it's like Warren Buffett says, nobody's gonna manage your money better than you. So start taking back some of your control of your own money. A good way to do that is to learn the difference between a short-term trader and an investor. And honestly, I would say follow the 80-20 rule. If you're not familiar with what that is, it's 80% of your investments should be long term. And then if you want to do the quick short term trading stuff, you do 20% in, say, shorter term time frames of, I probably wouldn't go any lower than like 3 months. Okay. And there, again, the reason why is because if you're in um, on these shorter time frames, if we look at Coca-Cola real quick, okay, we're on a 2 hour time frame. Look what you're seeing here. Each one of these is representing 2 hours, right? So, I mean, we couldn't add that up, but that's, back here on April 21st is when we got this sell signal. April 20th, April 21st, 2020. If we go all the way over here, we're on May 28th, right? So that's, 28 days. That's quite a while, but all you're seeing here is red, right? So as a short-term trader, if you're in a trade, and let's say you bought up here where my cursor is, and the price started going down, and this is all you're seeing at that current moment, remind you, this is an old chart, so we can move it forward. But let's just say if it was current, you wouldn't be able to move it forward to see where the price is going to go. All right, so you don't know where it's going to go, but all you see is a sea of red right here, and your emotions will take over, and you're sitting there going, "Oh my God, I got to sell. I got to get out." What ends up happening is you end up selling. You know, I don't know where you would sell, but a lot of people would probably end up selling like down here at the very lowest because they're praying and hoping it's going to go up, right? But their emotions get the best of them as well because all they see is a sea of red. So they start panicking and they're just like, okay, it's not going up, it's not going up, dude, I better sell. Well, let me show you something real quick. That's on a 2 hour chart. So let's go back to that same time frame. Um, there's April 25th. Okay, so right here, what did we say? April 20th. That's 2019. There's March. Okay, so let's see. Yeah, we were on a 2 hour. Give me 1 second, guys. So yeah, April 20th, 2020. Just want to make sure I got the time frame right there. There's March 20th, April 20th, right here, right? So when we were at that 2 hour chart, you just saw a sea of red. On the daily, you can see further out. Okay, so each one of these candlesticks represents a day. And if we go back to April 20th, we were right here. Okay, so you have one little candlestick right there, as opposed to a whole, that one little candlestick right there. If you went back to the 2 hour, it was nothing but candles, red candle bars all the way across, right? And you would have been panicking. Then you can zoom out on the daily and see more long term, and it's like, okay, you know, I should probably get out. Granted, if you were playing a daily chart, you would have got out like probably way back here because you can see further out like what's happening daily. I like to use the weekly charts because you can see even further out there. So each one of these candles represents a week, and so you're better equipped to make better decisions. Is basically what I'm trying to tell you. When you're zoomed out and you can see the macro level of what's going on. Okay, and back to the stats that I was telling you about with day traders. timing never works. Okay, I can attest to this because I've, like I said, I do a 80-20 rule. So 20% of my investments, or 20% of my cash, I'll put into like more short-term stuff just to see if I can accumulate some money here and there, and get better with practice. But one thing I've learned through the years, every time I do that, I'll have a good winning rate or a good winning ratio. So I might get up to about 80-90% winning ratio on my trades, and I'll keep going thinking that that's going to maintain. Like I'll be able to maintain that. And what ends up happening is the markets turn over on me because I'm playing those shorter time frames, and I can't make good judgment like I can playing like a weekly chart. And you end up losing money. Your emotions get the best of you every single time. At least with a weekly chart, if you are going to do some trading, I would highly recommend playing a weekly chart or a daily chart. I wouldn't go anything lower than that because then your emotions start getting the best of you, like I said, and you make poor decisions because you can't project as easily as where you're at, on the price. So it's just much better to do it this way. So like on this date here, February 18th, 2020, like I mean if you went back right here, the price started dropping the very next week, you know. But if we go back to the like a 3 hour chart and I try to find that date, what did we say, February 18th? Just to show you again kind of what I'm talking about. You're up here, right? And then we just started dropping. But you would have not been able to, you know, you wouldn't be able to see that as clearly. And it's just, like I said, the weekly chart's going to help you determine where you're going long term. Play with TradingView, guys. See, you know, how it works. Look at the indicators. Look at the signals. But again, like I said, if we go to let's go to my crypto chart real quick because we'll take a look at Bitcoin, and we'll go off current data right now. This is a weekly chart that I'm looking at, and on a weekly chart, I can pretty much gauge where this thing's gonna go. I mean, we're in a bull run right now, and if you draw a trend line, I won't be able to do one there because we dropped below the trend, so we'll have to start a new trend up here. But that's your trend right there on the weekly. Okay, on a weekly chart. If I was looking at a 2 hour chart right now, I can tell you that based on the weekly chart, we're testing the weekly support. Okay, and because we're testing that weekly support, it's a weekly chart. So here next week, what's to come? Well, could it go down? Yeah, it could. But look at the long-term trend. The long-term trend is still up. Okay, we're still in a buy signal. So I'm guessing this thing by next week is probably going to bounce up. Now, if I was trading and I was making an investment, you can see that right now we're on a low right here, and it might be a good opportunity to buy in. This isn't financial advice, by the way. I'm just telling you, kind of thinking out loud my thoughts from a long-term perspective versus day trading. So I'm just trying to show you that you can make better decisions this way, better buy-ins when you're buying the dips if you're playing these longer time frames. Like, don't just think weekly, think 6 months out. Where do you think the price is going to go? Is it something that you even want to invest in? That's another thing. So like when you're investing, make sure that you're buying into something that you believe in because that'll help you stay in long term. And again, statistically, all you have to do is look at Warren Buffett's record, look at Carl Icahn's record, guys like that. These guys don't do short term stuff. They'll go in and buy on the lows, based on what they're seeing. And a lot of that, data is predicated on the guys working for them who do this kind of stuff. But they'll be like, hey, this is a good opportunity to buy, like right down here. So we'll buy it on a dip here. Could it go lower? Yeah, could go lower. And if it does, guess what? We'll just double down because our mindset is long term, and we're thinking, you know, holding for like a full year. And so, within a year, is the price going to go up? Well, yeah, absolutely. How high? Again, a lot of that's just, uh, you know, based on technical analysis and where you think the price is going to go. But ultimately, it comes back to controlling your emotions, trying to stay in. And the best way to do that is get into investments that you really believe in, okay? Stay in your circle. They call it your circle of competence. And that's one reason why you'll never see like Warren Buffett invest in, say, Bitcoin because he doesn't understand it. I know Bill Gates tried to get him to invest in Microsoft a long time ago, and he said quite simply to Bill Gates, he said, "Dude, I don't understand that. It's not my, it's not my lane. So I'm just going to stay in my lane. I'm going to stay in my circle of competence with what I understand." So those are just a few tips for you. That's kind of my take on long-term versus short-term, investing versus day trading. But with that said, if you're liking the information that you're hearing here, I'm gonna be putting out more content, with investing that's gonna teach you this kind of stuff. Just based on my own experience and what I've heard others say that are far better at investing than I am. So stay tuned. Subscribe to the channel if you haven't. Hit that like button as well. And you guys have a good day. All right. Talk to you later.